All right, my name is Chris Campbell. I'm a practicing CPA, and I work with small businesses and individuals to help them pay the least amount of taxes possible while keeping them out of jail. So today I wanted to talk about businesses that may have a charitable component to them or charitable intentions along with the business. Now, I had a call with a client not too long ago, and they were performing income generating activities, but they wanted to use those funds for, or at least a portion of those funds, for charitable purpose. And I wanted to walk through the structure of how a situation like this should be handled. I do come across a number of business owners that do have some charitable intentions. Maybe they want to donate some of their profits to other organizations, but this is specifically if you have your own mission and you're conducting your charitable work yourself. Because if you're donating to others, it's as simple as just writing a check to whichever organization that you'd want to take care of. Let's say you are conducting the charitable duties yourself. You want to create two different entities. You want to create your for-profit entity where you conduct your business to generate your income. And then you're also going to create a separate entity, which will be your nonprofit. So you have to go through the steps of creating a 501c3. That is the IRS statute that goes over and discusses charitable organizations and allows such organizations to be tax exempt. And you're going to have your for-profit entity donate to your nonprofit entity. The way I've seen it in the past, which might not be the best way to approach it, is once everyone takes the profits out of the company, they would then use those funds and donate it. But depending upon how your entity is set up, you're paying additional taxes on it that you may not need to before donating it to charities. What you're going to do is have that for-profit organization make the donations to your nonprofit. And by doing that, you'll be able to make that deduction. Now, with that, assuming that the business is a pass-through entity, that will not be a direct deduction from the company. But if it is a pass-through entity, so if you have an LLC or an S corporation, that donation will be passed on as a deduction to the owners and or shareholders. So for example, let's say that in your for-profit entity, you have two different owners. You have a net income after everything is said and done is $100,000. You take that $100,000, send that and donate that to the nonprofit. You still have a profit of $100,000, but then each of the owners will then have a deduction of $50,000 when they file their individual return. So that's where you get the benefit, and that way you get to reduce your taxable income. Now, a quick note that you do have limitations when you are deducting charitable donations. It is mostly 60% of your adjusted gross income. So you can't be in a situation where 100% of your income is donated to charity. You have that limitation. So with some good planning, you can max out that donation from your for-profit and minimize the taxes that you have to pay on your profits while benefiting your nonprofit. So that's all for now. So if you have any questions about this particular topic or any other accounting or tax related questions, feel free to reach out. I'm happy to help. That's all for now. I'll see you on the next one.